Hello, and welcome back to another series of What Do You Want to Know Wednesdays with your local South Florida realtor. I'm Kathia Green and my lovely real loan originator partner, Eileen Garcia. Hi, Arlene. Happy New
Hello,
Year.
Thea. Happy New Year. We're back again. We're ready to kick off 2026. I think 2026 is going to be a great year for home buyers. I think we are going to have a lot of opportunities in this
Good.
market. I really do
Very
see it
good.
coming. So I think we're starting off on a positive note for
I'm
January
excited
and
about that.
2026 to come.
Awesome. So that brings us to our topic today. It's how buyers are affording homes in today's market. And today's market, we're talking about is the top of 2026. So let's talk about affordability. Let's talk about the waiting game, why wait as opposed to, pulling the trigger and buying now. And then we can also talk about maybe pick one program that buyers can take advantage of since it's the beginning of the year and they're getting ready to file their taxes as well. So let's talk about that. So I'm going to hand it off to you and we can get started.
So yeah, I mean, I see a lot of opportunity coming into 2026. I think that rates are starting to show some improvement, and that has gotten in the last couple of weeks a lot of movement, which is
Good.
great for sellers. It's also great for buyers. One of the things that we have noticed is that there's still a lot of sellers helping buyers with seller contribution. So that's a great thing. And when rates come down, that brings out more buyers. So I always
Yeah.
tell people take this opportunity, don't wait to buy because eventually, like everything, all good things come to an end. And we don't want to be in a position where we're paying overpriced on properties like we did back in 2020.
Right.
I don't know if it's going to get to that point. I'm not 100% sure. I don't think so. I hope not. But I think that buyers really need to make a plan. I'm very big on planning. Let's plan.
Absolutely.
Let's have a budget in place, a plan in place. If you're not sure what your credit looks like as of today in
Mhm.
January, let's sit down, let's review this, and let's make a plan to make you a homeowner in 2026 with so many opportunities around us.
And we're already 8 days left in the first month of the year, and the clock is just ticking very quickly. And I know, so if personally as an agent, I've noticed that around Thanksgiving, everything started to slow down. People were more focused on the holidays and things like that. And now the interest is starting to gear back up. So buyers, what that means is now there are more buyers out there competing for that same property that you may be interested in. So, what that does is that starts a bidding war as well. So the sooner they can jump in and not wait for, let's say these buyers to finish filing their taxes or whatever it is they're waiting for, or better weather as well. Because statistically, when it's a little cool out, nobody wants to go. Even in Florida, we still get a few little cold spells. But all those things goes back to don't wait. Like
Yes,
we've been saying that since last year. Don't wait.
yeah, I agree with you. Take the opportunity. And it's funny you mentioned because I know that there's a lot of people outside of Florida. We got a little bit of snow in Florida in the panhandle a couple days ago, and we're about to get hit with another storm up north. So now would be a good time to look at Florida.
Yeah.
Florida, yes, it's a little bit pricey sometimes, but you know what? Our weather is very good weather. We
And
always
no state tax.
and no state tax. That's very important. No state tax. And it doesn't really, it's not supposed to technically snow in Florida.
Right.
So,
So that's like a fluke.
yeah, that's a fluke.
And but even that snow is just flurries. It's not a true snowfall. What that
Yeah.
they just played that championship game in snow. That
Hmm.
was crazy. In between every play, they were out there trying to clean up the field.
Yeah.
We don't get that.
Well, and another thing about Florida is we still have money for hometown heroes.
Yes.
So that's really big. We actually are still lending for hometown heroes. and it's for anybody who works for the government, police, firefighters, teachers, anybody that works in the school system. You don't even have to be a teacher. You can work in the cafeteria, a janitor, security guard for the schools, non-for-profits, medical offices. I mean, there is still money available. And my favorite thing about this program is you do not have to make a payment on this money. So they will lend you, let's go and go through the whole thing. They will lend you, for Hometown Heroes, they will lend you either 5% up to $35,000, whichever one is less.
And that's significant.
That can have a customer coming to the table with very little to nothing. Um, so they'll lend you, let's say they lend you your 5% or 35,000, whichever one is less, and you're not
Mhm.
going to make a payment on this unless you sell this property, pay it off in 30 years, or refinance. So
Right.
the money is technically not free because you do have to pay it back, but it doesn't acquire interest.
Right. And then, the thing about, I tell people all the time, because I'm a big advocate of these down payment assistance programs. And when I tell people, oh, you have to live in the home for 30 years, then it's waived basically, or paid off.
Mhm.
But if you sell, like you said, sell the home or refinance before those 30 years, that money does become due. And they're like, oh my gosh, I've got to pay back $35,000. I was like, well, think about this. There's equity in your property when you're ready to sell it. So in your net proceeds, those dollars come back. So you're not technically having to physically come out of your pocket unless you're upside down. But for the most part, and once you explain it that way to people, it kind of makes more sense, because that's what scares people. There's one, I've got to stay 30 years. And then two, my goodness, I've got to come out of pocket about tens of thousands of dollars to pay it back.
Correct. Yeah. Yeah. But think about it. Even if they lend you this money, let's just say, and you're renting right now and you're paying, I mean, I don't know, what would you say the average rent is right now that you're seeing?
Well, are we talking apartment rentals or home rentals?
Let's go with a single family home.
Okay, so a single family home in Broward County, let's say Miramar, 33029, a 3-bedroom, 2-bath house around 2,000 square feet is going for $3,600 a month.
So, okay, $3,600 a month. You can actually purchase a property and pay $3,600 for something that you own.
That you
So
own.
right
Yep.
now you can have not enough money saved up for down payment, or you only have $5,000, whatever the case may be. But imagine that you qualify, you're in one of these professions and you qualify for this money. And then you work with Katia and she gets you seller contribution
Mm-hmm.
because you're allowed to get seller contribution on this program. So now you're combining the Hometown Heroes money, which will never acquire any interest whatsoever. You're getting seller assistance.
That
You
will
can,
help buy down that rate, like we talked about before in the previous sessions.
correct. So I tell people there's an opportunity. This is what an opportunity looks like.
Yeah, it's a win-win.
It's a win-win situation. Historically, houses appreciate.
Mm-hmm.
So I don't think that people worrying about having to pay this money back should stop you from purchasing a home.
Absolutely. And even if, here's another scenario that I give my clients as well, is you're paying $3,500 a month. And just for easy math, I'm going to do 10 months. That's $35,000 that you've paid, right? In 10 months that you're never, ever, ever going to see again. You're paying that landlord's mortgage. You're paying down their principal balance, right? If you paid that same 35,000 and you only lived in your house for 1 year, even if you got $0 back and it was even Steven, you just lived in a place for a whole year basically for free, if you look at it that way.
Yes, correct.
So there's always an upside.
Mm-hmm. Yeah.
Unless, like I said, unless you go and put a roof and you do all these other things and borrow against the home, and then now you're upside down. But
But
for the most part,
houses appreciate.
Yep, absolutely. And especially if you do the improvements, that are significant, that's going to also quickly improve the equity in your home because all of those upgrades have a dollar value to them,
Yes.
to increase the value of the home. So, okay. So let's talk about what someone needs to do for this first time home buyers program, because there are limitations, there are rules, there are things that, it's not an infinite bucket of money. Also, it's per county and I think per city. Each
Yes.
city
So
has
every
their,
city, correct. Yes,
right,
you're
has their allotted
absolutely
funds,
correct. Hmm.
right?
Every
And
city has
then
their
there's
income
things that
limits.
you have to be eligible for. So let's go through that list so that they can kind of understand and see where they may be shortfall in that requirement and where they need to fix it.
I think that the income limits are pretty aggressive. I mean, you're talking about, I believe in Broward County, you can't make more than 150, 170,000,
185 in
185. Thank
Miami-Dade
you.
and 172 in Broward.
So that's a very broad income. I mean, your
Yeah.
average person or average couple is not making that much money. So it is a good way to get into a home and take
Mhm.
advantage of this product. It really is.
Now, there's also a maximum purchase price that goes with these homes as well
Well,
per
you got to
county.
stay into your FHA limits and you have to stay into your conventional limits. So
Okay.
it's a very good program because FHA has increased their limits in 2026 and 2025, sorry, and so has conventional. They
Okay.
have both increased their limits. So you can definitely get very good properties with this program. And
Okay.
maybe you do have, maybe you say to yourself, I want to save some money for repairs on the
Hmm.
property. And I'm going to take this hometown hero money for the down payment. I'm going to take the seller contribution for my closing costs. And now I'm going to do some repairs in the house and put it to my liking.
Yeah.
And that's okay. We can
Yeah.
definitely do that. You can pair hometown heroes with any FHA loan, any conventional loan, or any USDA loan. And my favorite one, VA.
VA.
That is my favorite one. Our veterans deserve this. They deserve
Yeah.
to be treated good. You can pair a hometown hero in Florida with a VA loan. So right away, a veteran gets 100% financing.
Hmm.
Imagine getting the up 5% of that sales price up to $35,000 plus a seller contribution.
Yeah.
I mean, it's really a no-brainer. You're
Just
coming
walking
in.
in with your things.
You're just walking in, you're just moving in, turning the key, walking into your home. If you want to fix it up, that's on you, to each his
Yeah.
own. But if you're a veteran right now and you are listening to our podcast, our YouTube channel, take advantage of this. Reach out to us. This is I know a lot of veterans get scared because there's not a lot of education out there, but you're
Right.
getting 100% financing to begin with. Let's say that you're in
Mhm.
another state and you can't use that hometown hero. You're still getting 100% financing.
Right.
But in Florida, not only are you getting 100% financing, you're getting hometown heroes, and Katia can get you some seller contribution.
Yeah.
I
And
mean,
not just hometown heroes as well. There's other programs that Broward County offers for
yeah.
down payment assistance as well. So, and you can definitely stack it. Going back to something that you said, where a lot of VA buyers are afraid or don't know about their benefits eligible to them. I've come across where sellers don't want to accept an offer with a VA loan. Again, because they're not educated about it. They feel like, oh, the person's coming in with 100% financing. It requires more. Like they feel like the loan has more potential to fall through before closing because that veteran is not having is not being vetted the same way as, where they have to put like 10%, 5%, 20%. So can we talk about that a little bit in terms of just to educate the VA buyers, but also sellers, so that it's not it's actually a very good offer to take a VA loan. So let's talk about
Absolutely.
that for them.
VA, so one of the biggest things with VA is the underwriters will work with you to make that it happen. It has to make sense, obviously,
Hmm.
but they
Right.
will work with you. I mean, there is once you have that application in the system and an underwriter touches it and they see a VA coming across their desk, they will do whatever it takes to be able to get this person approved. VA allows high DTIs. So you don't have those DTI limits that you do when you're going conventional or when you're going FHA, which means your debt to income ratio as a veteran can go into the 60s.
Wow.
As long as it gets approved, you are fine. And if it doesn't get approved by the system, we offer manual underwriting,
Okay.
which means that an underwriter, it's not getting approved by the system. You send it in to the bank, the underwriter reviews it, and the underwriter will sign off on this loan and say, you know what, this veteran deserves to buy this property.
Okay. So
There's
what kinds of things so they've got the high DTI, they can still be qualified. But what kinds of things would kill a VA loan? Just like I said, I'm trying to ease the minds of sellers to say, hey, let me go ahead and accept this offer. So what kinds of things would say, you know what, we really tried, but we just can't, at the 45th day, the person comes back and says, we can't fund this loan.
normally what I see is when you're doing a VA loan and the credit score is very low and it goes into manual underwriting, the biggest thing is that they're not allowed to have any on anything,
Yeah.
whether it's a Macy's credit card or a Shell gas station card, whatever's on your credit in the last 12 months, you cannot have any lates.
Okay.
Other than that, I mean, VA, people are scared of the appraisal. There's no reason to be. There's no reason to be scared of the appraisal. And here's another thing that a lot of people don't know. Once a VA condo is approved, it's approved for life.
Oh, okay.
And they're really not that difficult to get approved.
Okay.
The VA will work with you to get this condo approved. It's not a difficult thing to do,
Oh, good to know.
especially
Okay.
in
Yeah, because
Florida.
condo sales are a little different, challenging here in South Florida.
Correct. But people don't understand that with VA is a little bit easier because if that condo had been, and this is public records, you can go into the VA website and you can check if a condo is VA approved. If that condo
Okay.
is VA approved, you don't have an issue. You can go in there and finance that, especially here in South Florida.
Okay. Now, a veteran loan is only eligible to active members of the armed forces, not retired personnel or is it auxiliary personnel as well?
You can get a VA loan if you are retired.
Okay.
Okay. You can use your VA benefits even if you are retired.
Okay. But going back to the hometown heroes, that one, if you're a retired medical professional or a retired first responder or a teacher, you can't be eligible for the
No,
hometown heroes. Okay.
no, but if you're a retired veteran, yes, you can.
Okay.
Okay.
Okay. Just want to clear that up for everybody.
Another good thing with VA that we're seeing a lot now, if you have a veteran and they're 100% disabled, they don't pay property taxes. So when you're qualifying them, you can actually show, okay, they're 100% disabled. We get their papers and they show
Disability,
100%
right.
disabled. We don't count property taxes for them.
Okay.
So that's another big thing
Another
with
savings,
Mhm.
right.
Yeah, that's a big
Yeah,
thing.
and that definitely brings down the mortgage amount because taxes are in that mortgage payment. Okay,
Correct. Yeah, yeah, yeah. So
wonderful.
definitely, I mean, there's a lot of perks. If you're a veteran, you should be taking advantage. Sorry, if you're a veteran, you should be taking advantage of your VA benefits.
So maybe what we'll do for the rest from this point to our next February um, broadcast is to really push out the hometown heroes information and links, and maybe some guides that they can download, or some information, and also the VA, and just really push that information out for them so they can be aware. So I
Absolutely.
think that's what we'll
People need
do.
to take advantage because this money will run out. This is, I
Hmm.
think, the third time they bring out the program in Florida, if I'm not mistaken.
Yeah,
This, yeah, the third time. And it does run out of funds. I think this is
yeah.
the longest that we've had funds just because there's so much volatile in the industry right now.
Hmm.
But they do
Hmm.
eventually run out of funds.
Okay.
So take advantage of this program. I mean, it's a phenomenal program.
Yes, it is. I've closed a few deals using the down payment, and I also have, well, not one with Hometown Heroes, and then a couple with other, like, first time home buyers
Mhm.
um, assistance programs as well. Which, folks out there, first time home buyers doesn't only mean that you've never owned a home, but if you haven't owned a home in the past 3 years, you can still be considered as a first time home buyer, owner, and be eligible for the down payment assistance as well. So that's a really great thing. So if you've been renting for the past 3 years and you own something before, you can still be eligible. So we'll definitely put that information out as well to let them know, to really take advantage, to help them get into these homes, along with pairing it with, seller concessions as well.
That's very important because yeah, sometimes that's obviously one of the questions that we ask. Have you ever owned a home before? And people say, yeah, I'm not a first-time home buyer. I owned a home in 2000, before the market crash. I owned a home in 2008. I owned a home in 2005. But we're in 2026. If you haven't owned a home in the last 3 years, you are considered a first-time home buyer.
So since we're in 2026, that would mean as of the end of 2023, you should have been renting
Yeah.
or living, couch surfing somewhere.
So you are considered a first-time home buyer. If you have not owned a home in the last 3 years, you are considered a first-time home buyer.
Okay. All right. Well, we'll definitely push that information out for everybody. Um, so I'm going to sum this up. Is unless there's something else you wanted to put out there, Eileen?
Well, I did want to mention as well for first-time home buyers, we do have 100% financing as well. So that's something else that you can definitely look into. We can obviously talk about that on another segment, but
You can touch
in,
on it real quick. We have a few minutes if you want to just touch on it, so at least pique their interest to
yeah,
ask us
so
later.
let's say you're a first-time home buyer, you have, let's say, I don't know, $3,000 to $5,000 saved up. So you don't have enough to put the down payment or the closing costs. Well, guess what? We have 100% financing. And with that one, you don't even have to be a first-time home buyer. That you just have to be living, that has to be your primary residence, meaning you will occupy this property, you will live in this property, and you can qualify for 100% financing. The seller's allowed to contribute up to 6% on these.
Okay. But
Okay.
what are we looking at, like, requirements? They need to have a certain amount that they're making, or is it a tax return, or business owners? Just kind of give a kind of summary of the profile of that type of buyer.
So this is an FHA loan. We will ask you for the last 2 years of taxes. This is qualifying with income.
Okay.
Okay. If they're going to give you 100% financing, even with the hometown heroes as well, you do need to qualify with income. We will ask you for 2 years of taxes. We will ask you for your current pay stubs, and we will run the credit. It's a full blown, full doc loan. You have to
Okay.
qualify. Okay. Now, once we qualify you, what happens is you're going to have a first loan where you're financed 96.5%, which is the norm for an FHA loan.
Mm-hmm.
The 3.5% will come in as a second loan. That's
Okay.
how we get to the 100%. Now, there's two options here, and that depends on the customer's profile. There's
Mm-hmm.
the option where the 3.5% doesn't need to be paid back, it's forgivable. So after a year, it can drop off. And then you also have an option where you do make a monthly payment on that 3.5%, along with your regular mortgage payment.
Okay. And that's for the term of the loan as well?
Exactly. But with it's such a small amount. The 3.5 is usually such a small amount that it really, you don't feel it in your payment as
A
much.
few dollars. Yeah. Okay.
Yeah.
All right. Well, good to know. We'll definitely put all that information in the link in our post, just so that they have that information to reach back out to us. We will be coming back again in February. We don't have that date quite yet, but we'll be pushing. We've been kind of around the second, third Wednesday. So kind of keep that in mind as well. So wrapping it up for the start of this new year, what buyers should be preparing for buying their homes in 2026. I'm Kathia Green, your South Florida realtor. And to reach me, I'm at 954 372 0270. I'm also on social media at Kathia Realtor. And Eileen, how can they reach you?
So that can be reached 305-790-3143. You can also leave a comment below, and we'll get back
Absolutely.
to you, Katia or myself. One of us will get back to you. And that's pretty much the best way to reach me. And again, if you don't be scared. Getting approved or getting just for us to look at your profile,
Yeah.
it doesn't, it's nothing out of this world. It doesn't hurt. We're not doctors, we're not
Just get
dentists.
started. Just
Just
get
get
started.
started. Get your 2026 started.
Yeah. New year, new start. Just start already.
Just
Stop
do
putting
it.
it off, buyers.
Just do it.
Just do it, Nike.
Well,
Oh
it
my
was a
goodness.
pleasure, as
Absolutely.
always.
As always. Until next month, we're signing off with What Do You Want to Know Wednesdays. And guys, get your questions ready for us for next month. Let us know what you want us to talk about. We'll be happy to bring that. Otherwise, we're going to bring our own topic about what we want you to know.
But if you have any topic that you would like us to discuss further, please leave a comment below and let us know, and we will be more than glad to discuss your topic. And we'll even reach out to you, and maybe you can be a guest on our
That would
webinar.
be amazing.
Yeah.
That would be great. Maybe we should do that anyway. Next month, let's bring on a buyer and
Yes.
let them ask the questions and let's see what happens. I
Yep.
like that
So if
idea.
you're a buyer, you're interested in coming on next month, or even a seller,
A
and you
seller.
want to come on next month and ask us questions, let us know. Reach out to us. We would love to have you on here.
That would be great. That would be
Yep.
great. I love it. All right. Thank you. Enjoy the rest of your day.
You too.
All right.